The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 17th magnificent Monday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, well, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of the markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Of course, internationally, 727-445-1044. Let's go ahead and get this show started on Magical Monday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow trading down 44 points. She's trading at 18,093. S&P down 4. Trading at 2128. NASDAQ Composite off 6 points. Trading at 5207. The Russell 2000 has a mind of its own. It's trading to the upside, $1.40 to the upside, trading out at 1213. That begs a question for us to go take a look at just what in the heck is the Russell 2000 doing. So we'll do that. The DAX closed down 76 points. The FTSE off 66. Gold is up a whopping $1.20, trading at $1256.70. Silver's up a whopping 2 cents, trading at $17.46. While light sweet crude back 50 cents, trading out at 50 and a quarter. Lead the charge here to the upside. It is Alphabet Soup, Google, up $5. Nearly 0.7%. You've got Hasbro, the toy company, up 7%, up $5 and change. Illumina Inc., that's up 2.5% or $3. Smart Marietta up $3.50. To the downside, you've got that Chipotle down $9.74, about 2.5%. Amazon is off $8, about 1% to the downside. Nothing really huge. Largest percentage mover is Core Energy Infrastructure, down 10%. That's about $3 to the downside. So welcome your calls, your instant messages, your emails, whatever it might be, the method for you to contact me. So what's the market doing? Very quiet day. Very quiet day out here. The type of day that could actually put you to sleep. I will not put you to sleep. I'm going to give you something to keep you awake. I'm going to do my best to try to keep you awake out here. With a day like today, this may say 42 points seems like, hey, that seems like there might be a move. Nah, really a pretty narrow trading range thus far. Maybe things get a little out of hand in a little bit, but at this stage here, what price is doing is just testing critical levels of support or potential resistance, with the exception being the Russell 2000. I hear someone's knocking at my door. It is Mr. and Mrs. Russell. So we really do need to try to figure out what is the message there. You'll see Stevie's green lines on my charts out here. These are 30-minute charts here. ES Mini is in the upper left. NQ is in the upper right. Lower left is the Dow. Lower right here is the Russell 2000 with a 10-minute delay, but it's not trading at 1206.80. You know, it's trading more closely to about the 1211 type area out here. So, you know, why say it ain't so, but it actually is so. So let's go start there with the Russell 2000. See if we can try to figure this out. How do we want to do that? Well, It's a good question. Let's just start here by going into the futures contracts out here, the equity futures contract. And what we can see here is that if we take a look, and look, you are the master, you are the expert at trading those singing in the key of G signals out here when you get down to that seventh wave move, or in this case here where I've got the lettering scheme on my screen right now, you get into that letter G. Today has marked letter 6 or F. Right in our dictionary out here. So it's possible that the Russell 2000, is it a bullish reversal signal we're seeing in the futures contract? The answer is no. So, hey, just kind of maybe a little bit of a fake out, you can't really call it a Michael Jordan move because it's not really much of a fake out. All we have to really do is pop the daily chart on our screen to say, not really a big deal out here. A big deal in the Russell 2000 daily equity futures contract would be getting above 1231.60. We're not likely to see a 20-point move to the upside between now and the end of the day out here. So this suggests to me that what the Russell 2000, if we just take a look at the daily chart, is really price is likely going to make that seventh wave move to the downside before there is the possibility of a bottom. Now, some of these patterns do fail, so it doesn't mean just because we get to that seventh wave move that's it. But we'll pay attention to that most certainly. So today, with regard to the Russell 2000, and just trying to answer the question, what's it doing? We have to give it the old not much with regard to what it's doing. Now, let's not just stop at the daily chart. And folks, we're doing this totally live. I haven't looked at the Russell 2000. I just looked at the screen and said, well, I think we really just we should take a look at what it's doing. Now, this could be a problem for you. Okay? Well, and the question would be, well, who's the you? It's kind of like in My Cousin Vinny, Utes. Right when he was talking about Utes out here. Well, with regard to Utes and the 5-hour chart, I can tell you that this chart is sponsored by none other than ESPN Game Day and Lee Corso specifically, because he's saying, Steve-O, not so fast. And why would he be saying that? Well, just like you and I talked about, like we discussed, in this case here, you can clearly see an A to B equals CD to the downside. We can clearly see, maybe not so clear, it'll be clearer if I go ahead and give this just a little bit of room. So we'll go ahead and we'll change those counts and give it just a little bit more space. Let's see if I give it a few more ticks out here, if that moves that letter. There you go. Now you can see the letters. There's a couple of different schemes on here. And when I say schemes, I mean it in the most positive sense. These are trading schematics, right? To be able to help us identify tops and bottoms. Well, let's face it. From the high out here on the 5-hour chart, let me get my cursor going. This looks like it's right out here at about 11:30 back on the trading day of September 23rd. I believe that we are in November. No, we're not November. See, I was just fooling you. It's really October that we're in, October 17th. So it's taken a long time to form this pattern. And price has moved down to that key of G. So why you get to that key of G, it would make sense that you would start to see the Russell 2000 starting to trade higher. Now, on the 5-hour chart here, here's the A to B equals CD to the downside. In case you can't visualize it, here we go. We'll go put this on the screen here as long as my mouse decides to go ahead and work with me out here. And what we can see, it's made more than a 1.272 A to B equals CD to the downside out here. So there's that pattern. So you've got that pattern, you got the key of G, and then you've got, of course, your favorite pattern and mine, price moving, in this case here, lower, doing it with less relative energy. That is the little black diagonal line you see between these candlesticks out here. And it was at the 9 o'clock hour where the bulls showed up in this chart. And price is now trading above your oscillator on change line. The Russell 2000 is going to trade higher, folks. That's what it wants to do. It wants to head to like 12.19. And you're at about 12.12 right now. Steve Rhodes with TFNN. With Red.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show heard daily here at TFNN.com. On Wednesday, October 19th at 5 p.m., I'll be hosting a special 1-hour event, Trading Range Boundary Lines, where I'll teach subscribers how to identify hidden support and resistance levels, the kind that you definitely need to be aware of for your trading and investing. You'll learn how to plot major horizontal support and resistance, how to identify breakouts and breakdowns, and how to project the next price move. These support and resistance levels work for stocks, ETFs, futures contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes October 19th's Trading Range Boundary webinar. Plus, if you sign up now, I'll include access to my 3 one-hour workshops, the ultimate trading signals, the ultimate reversal signals, and the long-short line that every trader needs to know. This is an investment you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we were looking at the 5-hour chart here for the Russell 2000, and it has something in common with its brother and sister. Not both of its brothers, just its brother and sister. So you've got that price relative strength divergent pattern. You got that 7th wave move to the downside. Price right now trading just slightly above its oscillator and change line. That looks a little bit bullish, says that price can go ahead and move a bit higher out here. However, there's not a unanimous decision out here. Now, remember, the cool thing about these types of patterns is that we can learn a lot from it, right? We can learn because there's nothing more bearish than a failed bullish pattern out here. So on the 5-hour time frame, you'll see here as we put the Dow chart up on our screen, you can see that this got to that 7th wave move well before the Russell 2000 did, right? So that's just playing a little bit of catch up. It got down to that 7th wave move. This was back here on the trading day of, when was that, Johnny? That was back on the trading day of October 13th. We're the October 17th time frame. That was about 1:30 in the afternoon when that occurred. Really would be 2 o'clock if my mathematical expertise is really working out here. So you've got now, and that's really cool out here because we know when significant levels of support get breached, I don't know if they will or they won't, but if they do, and I suspect they will, and I'll go through the reasons why for you. But you see, you've got that pattern in the Dow. You've got the same type of pattern inside the ES Mini. It got down very similar to what we just looked at. This, by the way, this is a very significant bullish reversal signal out here, this 4-candle session where we formed that 7th wave move. So, you know, we're going to, and you might say, well, Steve, what's the price inside the ES Mini that we're going to pay attention to? I'm glad you asked me that question. It's 21.28. You get below that, you're only at 21.21. No, it can't be 21.28. I'm glad you asked me to relook at those numbers out there. 21.0775. See, I was just fooling you, just making sure. I told you, I'm not going to let you sleep. I'm going to keep you on your toes out here. Also going to keep myself on my own toes. So 21.0775 is a number. You're at about 21.2075 right now. You get below that, that's going to give us the signal that very bullish patterns have failed. And that'll be very important to both you and I. Now, the brother or sister that is not participating in all this action is kind of amused by it is the NASDAQ. So let's take a look at it like this. NASDAQ is not giving us any kind of similar bottoming signal to what the ES on a 5-hour chart, the ES, the NQ, and the TF, right? The Russell, the Dow, and the S&P futures contracts out here. If by any chance, and if you're an intraday trader, because we got to admit, for the most part, this is still a day trader-ish type market out here. It's not a long-term investor market. The patterns that still continue to play out here, that will get to be a long-term investor market. We're just not there just yet. But should we get some type of bottoming bounce going inside the market, which of these four would you want to play to the upside? Sort of kind of leading the trader to good drinking water out here. It would not give you, water from Flint, Michigan or anything like that. So in this case here, it would be the NQ. So if you're a day trader, here would be my suggestion. You would look to the NQ for your long trades. And on the short side, you could pick any one of them. Really, you could pick the Dow, the ES, or the Russell 2000 out there, as opposed to trying to play those to the long side and this to the short side out here. They're just a suggestion for you to consider out here. Okay, now I mentioned that I do believe that we will see those patterns fail out here, and we're really going to be paying attention to just a couple of things that give us, you and I were clue seekers out here, and by being clue seekers, and we have to interpret what does that mean. So when we are clue seekers, one of those clues that you and I look at is we take a look, because that there are some extraordinary tools. When I said things, what the hell's a thing? Oh, geez, I got to be careful there, I guess. But you know what I meant by that. I meant it in the kindest of way. There are several things that we want to pay attention to because the VIX indexes has some extraordinary tools that you and I can take advantage of. We could give a rat's patootie, whatever that would be, about whether this seems to be indicating fear or not. You and I could never trade that statement and tell us what the Sam heck it means out here. But we can take a look at the lines on Stevie's chart out here. We can see that when the VIX has that little rising bottoms pattern out here, as it has, that has always led to a market that has retraced. Has the S&P 500 been retracing? It most certainly has. What's the next line that we start to take a look at? You know that it's the red line. It's the one. I don't care what political affiliation you're at. You pay attention to this red line and you act upon it. That happens to be 1416. We're at 1651 as we speak right now. Once you get above that, that says that's when the demolition derby can start running out here. And so that we haven't seen a lot of demolition, but it could be coming to a screen near you. We also pay attention to Stevie's blue line. Because once you get above that, 1545, and you stay above that, as we saw a test on Friday, was nothing more than a test of old resistance that has now become a support. 1545 is the number. That's another statement that the VIX index wants to move to higher ground out here. So with all those things being in place, that suggests to you and I that the market still has further to go to the downside, even if today it's taking a little bit of a time out. If we look for other bottoming patterns, major bottoming patterns, significant bottoming patterns, because, folks, that's what the market is going to do. I don't really care what the folks on the boob tube are telling you. Congratulations to Judge Wapner there for, his 5th year. I think I've been doing this for more than 5 years, but that's not, and you take a look at his guests that'll come out there. I have shared this with you. I shared this with you last week when we took a look at longer term, what to long-term interest rates rising, short-term interest rates rising mean to the stock market. And you know the answer to that. That means the markets will go higher. The stock markets dig rising interest rate. It is that simple. However, on an intraday-ish type basis or very short term, you'll see the old Michael Jordan head fake out here. So don't be listening. They know this stuff too. Okay, this is not now just you and I. They know this stuff. Or if they don't know this stuff, do not have your money with those folks out there because it's playing right in front of us. And why the boob tuber guys don't show this to you is just, that's why it's hard for me to listen. I just want to take both hands, stick it through the tube, squeeze it around, and let them know who's boss out here, which is you. So here's the thing. When the market makes these bottoms, and I don't know how I got off track there, but it was pretty easy to do, you have to admit. And just trying, I told you, I'm going to keep you on your toes out here. Because otherwise, I don't want you to go to sleep. When the market makes these major bottoming patterns, at least one, if not all 3 or 4 of these indices create the same type of pattern with regard to that bottom panel out here. If we just take a look at the New York Stock Exchange, not good for a whole lot out here since you and I really can't trade it, okay? But it is good for a couple of things of helping us to identify in the general marketplace, so to speak, who's really in control here, buyers or sellers. You know, you get below the zero line where we've pretty much been parked for a long period of time since August. Tells you really it's sellers that are in control of the marketplace. There's been a couple of fumbles, but they got the ball back pretty quickly without the Bulls scoring any kind of touchdown, field goal, or safety even out here. But you'll usually see some type of divergent pattern, a lower low with a rising advanced decline oscillator reading. It's nowhere to be found, whether it's the New York Stock Exchange, the NASDAQ Composite, or the Dow out here. That combined with this, you've got to wait till we come back from the break before we can go take a look at this. I know you're just sitting on the edge of your seat. You should be sitting on the edge of your seat. It's a good thing to sit on the edge of your seat. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. As most of you know, 2 days, or if you don't know, you'll certainly know now. On Wednesday evening at 5 o'clock, I'm hosting a workshop that is called Trading Range Boundary Lines. Just one of a set of tools that you and I utilize to help us identify what the market is doing. So in that workshop, we'll be taking a look at the rising and falling channel lines and levels of horizontal support that don't just stick out to you on the chart, but they act excellent as being able to identify the boundaries in which prices trade within. So, and they work on all different time frames. Now, of course, included in that are 3 previous workshops that I had done. One of those being the oscillator and change line. That, if you're watching us on TigerTV right now, and I teach you how to do this, it's not one of those workshops you go to and it's just like a bait and something or what have you. It's a real thing that you're going to utilize these tools for the rest of your life. I promise you will utilize these tools for the rest of your life. I've got zero interest in wasting your time out here. Now, in this case here, you and I have talked about it. Why is it that I believe the market is communicating to you and I that it wants further to go to the downside before you load up your truck and go to the upside? Of course, that's going to be dependent upon who actually wins the election out here with regard to how long-lived that move is, but there still is going to be a nice move. We're just not there just yet. And if we take a look at that, we're looking at the price oscillator change line. That's the upper portion of my screen. That's because in an instant, I can tell you whether the bottom panel, where we look at the price oscillator, whether it's rising or falling. Is that important? Of course it is important out here. Now, it is really important, especially when we take a look at the S&P 500, a better vehicle to take a look at the New York Stock Exchange, for goodness sakes. We can trade this one. You can't trade the New York Stock Exchange. So its message is a kind of, hey, why don't we watch something that we're absolutely not going to be able to utilize? Well, there are some benefits of it. But if we take a look at this, nothing more bearish than a oscillator that turns down below zero. And that's really what took place here if you look at the bottom of my screen just a few trading sessions ago. And that was your clear signal, one of the clear signals, to go ahead and get on the short side of the train out here. Now, where's that station going to take us to? Well, we've got to take a look at different patterns, and we'll pay attention to those, on the way down. But this suggests, just as it did, same pattern, right? Patterns repeat over and over again. You and I repeat these same patterns every day, every morning. Typically, well, you probably go to bed around the same time. You probably sleep on the same side of the mattress every day. You probably sleep on the same side of your body most of the time. There's when you put your pants on, the right or left leg goes in first all the time. You tie your shoes. You tie ones. You know what I mean. I mean patterns. You probably might even eat the same thing every Friday night for all I know. Patterns are out there. If they're out there for everything that we really do in life, don't we want to believe? I don't care whether we want to believe it or not. Shouldn't we believe that they work that same way in the stock market? It is that simple. It actually is that simple. You just need somebody to be able to point these things out to you. If we take a look at the last time that we saw this similar type pattern out here, the market had quite a Nike swoosh to the downside out here. That began on January the 5th. Yeah, this isn't going to catch the top. That's what that seventh wave move is all about, such as, for example, up here in the S&P 500, when on August 16th, it really wasn't confirmed until August 17th, that made that seventh wave move to the upside. How does that work? I don't know. Nor can I tell you how electricity works. And for the most part, I can't tell you how my car works when I turn on the ignition and it goes on. I know if I don't have any gas in it, it's probably not going to start. It's not going to drive very far. I just know that these things work. That's what I want you to understand. You don't have to understand the mathematics involved with the oscillator and change line or the price oscillator out here. You just need to be visual, that's the cool thing about the pattern recognition tools that you and I look at each day, about the pattern recognition tools that are included inside the workshop that I'm going to be hosting 2 nights from now, and you get the other 3 workshops. So these are tools that will last a lifetime. And I don't know, at this stage here, I think we're not going to do this, at least be able to give you access to those tools for a long time to come. The deal that we have provided here, it's just too good to be true out there. And sometimes too good to be true, people just don't take advantage of too good. Don't let that be you. And it's not too good to be true. If you are a technical trader, you're really trying to get this down, then you've come to the right home. That's certainly TFNN. Hey, look, we just have to go back a little bit further to see the last time we had a similar pattern like this one, which was August 21st, 2015. Now, is it going to get the same results out there? I'm not one of those guys to say that it is or it isn't. I'm going to say it has provided us the result that tells you which side of the trade to be on. And now we have to be these little clue seekers, right? We've got to utilize this entire arsenal of tools that we have to go out and identify, just like in my cousin Vinny, we've got to identify where that next reversal pattern is going to take place and stay within the time frame that we're trading. So the S&P 500, beautiful tools, giving us a real clear signal. We're only in wave 5 to the downside, so no reason that we can't just get an A to B equals CD to the downside, that little lightning bolt tool that we've got out here. We put together that price projection, and it's not that big of a fall. At least that 1-to-1 level, you're at 2105, 2084, no big deal, 2059, if we could be so fortunate to see price get down there. All that's doing, any of these levels that we're looking at, even 2030, is nothing more than a Gartley buy pattern, which you'll also learn about in one of the previous workshops. That's included when you sign up. And if you sign up right now, you're going to have access to those workshops right this very second. So the S&P 500 giving you and I a clear signal. Now, the interesting thing here with regard to each of these, if we just relied upon the index ETFs, what do you mean by that? What did that kid used to say? What's it, Lewis? Was it Lewis? What do you mean by that, Lewis, or something like that? The problem here, if we were just to rely on these as our tools out here, let me just go ahead and put up the volume pattern. This is why with regard to the index ETFs, I say volume schmolium. Stocks, whole different scenario. Why? Because hedge funds and so many people are utilizing these things out here, and quant trading systems, and all kinds of. Hey, look at the volume here on the swing point that it's got to take out, basically, on the A to B equals CD that you and I just looked at, 168 million shares. We haven't seen 168 million shares since we saw that 168 million shares out here. So basically, we could conclude that there's just no way in France, and I'm not sure what that means, that we're going to bust through there with volume. I mean, even today we're testing it. By the way, that's 212.39 is the number. We were down here a couple trading days ago, 101 million shares. Today you're at 31 million shares. Do you really think at 137 the S&P, or the SPY, I should say, is going to muster up the volume that it needs, 130 million shares in the next few hours? Come on, not even a chance. But does that mean if it doesn't, that if it closes below 212.31, that nada, it's not going to do it? It's not going to form the A to B equals CD to the downside? You bet your sweet bippy it doesn't mean that at all. So, watch that level. I'd be watching that level, 212.39. The heck with the trading session from October 13th, which had 101 million shares, and that low is 213.01. Instead, the better information is coming from the place where you're getting information basically round the clock, okay? And that is inside the equity futures contracts. That's what you want. If you trade these vehicles, these ETFs, any derivative of these 2 times, 3 times, how come they don't have a 4 times out there? But whatever it is, you really should get access to the equity futures contract. It won't cost you very much to do that. And the set of tools that each of us share with you out here, certainly the ones included that will help you identify tops and bottoms in the workshops that I put out there. So Steve Rhodes with TFNN, watch the 212.39 level. It's not going to have volume no matter what. Steve Rhodes with TFNN. We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 54, S&P's down 6 points. Russell just slightly green out there. Hasbro, the leader to the upside out here. Let's go take a look at Hasbro. I don't see any emails out here. If there was something sent, it hasn't come through. My apology, or maybe it's gone into that nasty junk box. But I don't think so. So a quiet day in Motown out here. Let's take a look at the Hasbro. Were they out with numbers out here? Covered call reports for sale. Hasbro, yeah, it looks like they had some earnings out here. Repurchased about 600,000 shares of common stock. In any event, let's just take a look at how, regardless of what they did or didn't do, let's just take a look at what investors or traders of the stock are doing. So you got big volume to the upside out here. Let's take a look at market profiles. Give us a feel for whether we're trading above daily, weekly, and we're trading above both. Today was a brand new supply line, and it's blown through that by getting above the 81.21 mark out here. Volume today, 5.8 million shares. Just out of curiosity, let me go over to one of my other charts. Type in HAS. That's the ticker symbol, by the way, for Hasbro. And sure enough, How about this? You talk about the patterns that you love to trade out here. Well, shoot, just take a look at this chart. When Hasbro formed its top, its most recent top out here, that was on this trading day right here, April 20th, courtesy of Tom DeMark. Also, one of the trading tools included with the package if you sign up. Did I say we were really actually giving away too much? We are, but we're not going to take it back. But it's not going to be offered again. That much is clear. Not this entire package. Just no way. Now, if you take a look at getting to that 13 count, that's that little blue 13. That is called a TD sequential count. As soon as price gets below that oscillator on change line out there, which is what it did on April 29th, this is a different tool. This is a different way to trade versus the way that Tom DeMark provides for you to trade. And that's because, quite frankly, in his book, he's pretty ambivalent with regard to how to go ahead and take that trade. So I just say, I got a Stevie tool, and one that I share with each of you that works really well. Tells us when prices, in essence, is turned down out here in a different sense. So look what happens, right? You get that signal up at the highs. Now, as price is moving lower, it was moving lower with less relative strength. Forget about the fact it's not showing today's candle session, which, by the way, it's not. You know that. We just took a look at it. I don't know what's going on with my system out here where sometimes there's a delay, but we'll just go back to the live. You can see that that is a gap to the upside. Nothing more bullish, right? Some people would tell you, some people might look at that gap and say, oh, geez, I shouldn't buy, or, that gap is going to get filled. Yeah, maybe eventually. Not tomorrow, for goodness sakes, out here. That is called a sign of strength. A gap is a wide-ranging bar. Just fill it in from the prior day's close. If we do that, it's the widest ranging bar on the Stark chart that is out here for Hasbro. So you got volume behind the move out here. Price, where is it headed to next? Well, it had a big downdraft here on July 18th, so it's certainly headed for that gap is going to be filled scenario. Probably not supposed to say scenario, right? Scenario? I don't know, whichever one it is. I can tell you this. Price inside Hasbro is headed for the 84.25 to the 84.92 level. And maybe it's going to go ahead and try for the highs one more time. I think we're starting to get into its good positive cyclical cycle, right? This is only quarter number 3. We haven't even gotten to their fourth quarter out there. So that is what's going on in Hasbro. I see a request in the den. TKC says MCD, Mickey D's, McDonald's, and I look at McDonald's for a long entry position over daily and weekly charts out here. Well, it is not today. That is, well, I think it's not today. So that much we've sort of narrowed down. But we're going to go take a look at it again. Ticker symbol there is MCD. Today to the downside, 2.8 million shares going against swing point that has 3.9 million shares from October 6. But one thing we do know, and this is kind of bad for McDonald's. This one TKC says nothing more bearish than a failed bullish pattern. Remember that. Folks, always remember that. You're going to say, what the Sam Heck is Steve actually talking about? And I'm going to, Sam Heck, show you what I'm talking about out here. Let's go ahead and put this screen up on our chart. Look, we know when price moves higher or lower, does it with the unenthusiastic energy, such as was up here at the top after that little TD sequential count. See that number blue 13 out there? Yeah. Then what also was going on at the same time? Price moving higher, doing less relative energy. And then the bears show up, get below that oscillator and change line. It is that simple, folks. You can do this. I know. Look, you guys can do anything. Don't ever let anybody tell you that you can't. You can read a stock chart. You can be able to know for yourself, and that's really where you unleash the power. You're unleashing that power from within you, being able to look at a chart and really know what is communicating to you. That is a beautiful thing. That is what we want everybody to be able to do with inside the TFNN family. Price was moving lower inside of McDonald's just a few days ago. Nice little bullish engulfing candle here on October 7th. And that was TKC suggesting to you and I that it's trying to form a bottom out here. I mean, that's what it's doing. It's trying to form a bottom. But if that low gets taken out, which it looks like that's where the threat is coming from. Let's come back here to this chart. I don't have all the tools on one trading application. I don't want to have to. Why spend the money when I don't need to? But again, I can combine both applications out here. So that low is 112.40. We're at 112.47 right now. So nothing more bearish than a failed bullish pattern out here. So if we look at this chart, and we can see we're below TAS market profiles daily and weekly out here. I go ahead and I turn those off. You tell me. Well, tell me as soon as I can turn them off out here. You tell me where you think price is headed to. Do you think maybe it's headed back to its sign of strength? Where on this chart would you clearly see unambiguous sign of strength inside of McDonald's? Where would that be? You're exactly right. It would be that friend of yours and mine, the gap, right? The wide-ranging bar. So all McDonald's is doing, it's coming back into that area-ish area of that wide-ranging bar, which could be priced anywhere between 102.08, 108.38, 110.87. Now, in the case of TKC, if he was looking to take a long position inside McDonald's, which is what TKC said, and it was for a longer type term trade, it must be. Otherwise, it would not have been suggested to go look at the weekly charts. So we should put the weekly charts up here. Then you can start once you start to see some signals here, then you can start taking a position. You scale into a position, right? You just want to make sure that you understand the money management. Position sizing is really what it's all about when you take a look at money management. And if you're not familiar with proper position sizing, well, voila. When you sign up for my newsletter service and you get all these workshops, you also get another one that deals with position sizing out there. And that will save your tuchus more than anything else that you can do and anything it is that you trade out there, because it'll keep you from getting over leveraged. It will give you, and it's a tool that's on the platform. When you sign up for my newsletter service, that helps you identify the exact position size that you should take a look at. But right now, TKC, this is telling us McDonald's is trying like heck to form a bottom. But you're going to have to wait for another day. It does not look like today is that day. And instead, more likely than not, take another gander at it. When price gets down into that 108.38 level. An open gap, it's a friend. It is not a foe. And we have to see what other patterns are going on at that same point in time. Yes, there's an A to B equals CD to the downside out here. I'm glad that you asked me that. There are several of them. Here is the larger one, so to speak. You can see it's at that 1-to-1, probably headed to the 1.272. Voila, lines right up with that 108.40 type area. Steve Rhodes with TFNN. Be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David Dwight as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
back, folks. We're going to go to Mike in Denver. Mike, thanks for calling. Thanks for holding. How are you doing this morning still for you, right? It's 6 minutes of morning.
It's doing pretty good. It's almost noon.
Good.
Sun's out.
Thanks for spending your lunch hour with us. Now, you want to take a look at Comstock Resources, and folks, this is an independent energy company. They acquire, develop, explore, and produce oil and natural gas properties in the United States, primarily East Texas, Northern Louisiana, and South Texas. So, have you been looking at this? Are you looking at this from a long, short? Tell me or are you in it? Tell me what you're doing.
Well, I'm not in it. I was looking at possibly getting into it because it looked like it's done its A to B, B to C, and getting ready to maybe go through the B. So I just thought I'd call and see what you thought about it. It looks like there's a lot more volume in it over the last couple of months compared to what normally it goes through it.
Yeah, what is the time frame horizon? So you've been following this. This is my first time taking a look at this equity. So, in what is it that you've been looking at this for a while? So, what is it that has you looking at this equity specifically? Not good. I'm just trying to understand what do you know about this equity?
Well, not a whole lot other than it's in the gas field.
Yeah. Is that an industry that you're in, or just you're just looking for stocks that are kind of bottoming in that
just going
sector?
through some scans. That's all.
Okay. So the nice thing about this equity, if we just take a look at it from a technical standpoint out here, formed a bottom with now it's not a highly liquid trading vehicle. When it formed a bottom back on May 25th, about 276,000 shares, pushed down with about 1 million shares back on August 1st, and the very next day about 529,000 shares, and off the bottom with 800,000. So not a lot of liquidity out here inside this equity. Nonetheless, it clearly formed a bottom. Just the Japanese candlestick signals alone, without regard to the other patterns out here. Nice big old bullish engulfing on May 25th, and then this little three-river morning star pattern between the trading days of August 1st through the August 3rd. Clearly, at that stage, there was a bottoming signal. Now that this has moved higher, the question becomes, is this thing subject to pull back? And the answer is it may be. Here's what you want to watch for next. And I'll be watching this trading day right here, October 11th. Do you watch this? Are you a technical trader at all, or no?
Not really. Just kind of chart recognition.
Yeah, okay, perfect. Okay, so I'm looking at this one specific candle. Most Japanese candlesticks either are kind of like neutral, or they help you to identify reversals inside the marketplace. Very few of them, in essence, were born to be a continuation pattern. But you do have this one candle signal on October the 11th. And I'm looking at the body of the candle here, which is 851 to 798. Price has been trading inside the body of that candle for the last 4 trading sessions. There's something called the rising 3, although I don't know why they gave it the 3, because really, if at any point in time between day 2, 3, and 7 or 8, you see a price move above that, it tells you it wants to move on to the next level. The question is really, where is that next level inside this equity? It probably is $9.41, and you're at 816 right now. Here's a little bit of the danger sign for you at this stage here, Mike, is it's moving higher, doing less relative energy. The types of patterns that help you to identify that price is going to pull back. Where do you buy this thing? On a pullback, you'd like to be able to come in right around $6.48. So I would just suggest, because it's moving higher, doing less relative energy out here, that you just be patient here for a while, continue to watch how this trades. But likely, your best buy on this, if we can get another pullback to about 648. And as long as it's pulling back with light volume, that's your spot to take a long position inside of CRK. All right, my friend?
Sounds good. I'm signing up today.
Okay. Thanks. Have a great day. That's Mike in Denver. You too have a great day. Folks, stay tuned. Our favorite polar bear, David White, he's going to be up next in the Tom O'Brien Show from 3 to 5. We'll see you on Turnaround Tuesday. Take care.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.